1 second, guys. We'll get this live cranked up here.
Hey, can I talk to you for a second? This
Sure.
morning, yesterday Michael Saylor bought another $1 billion worth. So in the past week, he's bought $2 billion worth.
He still have money to buy?
Oh, yeah.
He makes no money.
Yeah. He has to. Got to keep the train going. All right.
But go ahead. But Grayscale announced today that they expect to see a little bit of softening more, but within the next 6 months, the Bitcoin to be 315,000 coin. And
no, I'm good, thanks.
Hey, guys, mute yourself out if you're not on mute.
20,000 somewhere in the middle.
Yeah. By when, George?
Because
When you...
there's too many things happening out there. All the fundamentals are in place.
Good afternoon, this is Donald.
Guys, mute yourself out if you're not talking to me.
Let me see if I can find that article again.
It's okay. We're going to get started here. I don't care what Grayscale says. If I hope that they're right, and I'm sure that they will be eventually. But there was a time when Grayscale was saying, not to buy any crypto. Crypto's a scam. Meanwhile, they were buying it all up on the back end. So if they're saying it's going to 300 grand, you got to just find out what the time scale is.
He's announcing it too.
Hold on a second, George. I don't know if you're talking to me or someone else. Because we've been hearing that for 2 years now from various different news agencies and different hedge fund people. So to me, it doesn't matter what anybody says. It's what's actually happening on the charts that matter. I don't need anybody to tell me that Bitcoin's going to 300K because I can see Bitcoin if it's going to 300K. I can see it actually going up in value. Same with you guys. So I don't get excited about those kinds of things. Whatchamacallit, Michael Saylor buying another some odd billion or so. I think he has to. It's part of his business strategy every month. And he has to keep the price up. Somebody's got to do it. All right. Yeah, on that little pump there, I was up about $400 on this signal I gave last night, the ETH signal. It did come back down, obviously, after Trump's little speech. But what did it come down to is the question. It basically hit this bottom overnight, popped back above this orange line here and held the support, bounced all the way up to here. That was the little pump we just had. Happened a couple times, happened back here when it hit this level, and then continued in a downward trend afterwards. Let me zoom out. By the way, George, I wasn't trying to be rude to you. I appreciate the news. I just didn't need to, you didn't need to go find an article because articles are everywhere. I see this stuff all the time. Everybody's talking all kinds of different stuff, but you're welcome to send it to me and I'll happy to look at it. But you got to look at the date of the article. You got to look at what time frame they're talking about, all that kind of stuff. And why is it going to do that? Because it's going to take more than billions. There's billions of inflowing into Bitcoin right now, and the price is not going up. So what's it going to take? It's going to take hundreds of billions, tens of billions coming in from also retail market. Plus, you got certain hedge funds that bought Bitcoin, hundreds of millions of dollars worth of Bitcoin, a couple years ago, a year ago, a couple years ago to up to a year ago, when Bitcoin was still at around 70, 75K. And then when most of those hedge funds went live, those ETFs went live back in 2024, the price didn't move for a while because they already had all the Bitcoin. It was already baked in to the current value of Bitcoin. So Grayscale was selling Bitcoin to BlackRock and all the other hedge funds, and the price wasn't moving. And it took about, I'll show you, it took about 280 days after. Right here is when the ETFs went live. 13 of them got approved. 13 of them right here got approved. And Bitcoin did this for 280 days, 7 months, downward trending until we retested this previous resistance as support. And we finally broke through here. So right here, March of 2024, ETFs get approved. Right here, November. So yeah.
Does the price, you said that there's billions of inflow, right? So, but the price isn't moving. So that means that the amount of inflow coming in, there's also that same amount of outflow or sellers, right? So that right now it just seems to be there's the same amount of buyers as sellers. That's why the price isn't really moving.
That's the other reason. Yeah. So you also got whales dumping. You got whales buying. You got institutionals buying and selling. BlackRock, for instance, sold billions of dollars worth of Bitcoin when it was in the 120 range. Why? Because they started their ETFs in the 75,000 range. And they have an obligation, a fiduciary obligation to the shareholders and of the ETFs to make a profit.
Don't they also have a fiduciary duty? Like when somebody invests into the ETF, aren't they buying, like say somebody buys one Bitcoin inside the ETF?
They're not buying one Bitcoin. They're investing into an ETF. They don't own or control any Bitcoin.
I thought it was a spot ETF.
Yeah, but who's holding the Bitcoin?
The ETF. Right, but isn't that giving them?
They're investing in Bitcoin on your behalf, just like when you buy a share of stock on the stock market through, Fidelity or E-Trade. They don't send you a stock certificate in the mail. Back in the day, you used to get actual certificates. I had a collection of them, some antique ones, but now it's like a promissory note. You basically have a digital, it just shows you how many shares you have on that platform, but they hold it and control it, right?
So it's not a spot ETF isn't where they can, I thought a spot ETF meant they could redeem for the actual Bitcoin.
I don't believe so. Anybody want to answer that question? Because you are not custodian of your own Bitcoin when you invest in a hedge fund. They are investing in the Bitcoin. You're getting the gain of the ups, and they're protecting you from the loss of the downs. That's part of why people do it. They don't want any responsibility of having to manage their own money. And so they hire these hedge funds to manage it for them. And instead of you potentially getting a 2x or a 3x on Bitcoin by holding it yourself in your own wallet, but having to also learn how to open up accounts and buy crypto and custodian it and have your 12-word C phrase and all that stuff, they take all that headache and responsibility away from you and say, listen, we'll just give you 14% annual return. And if it goes down, you don't lose any money. That sounds great. That sounds like a good deal. So you put your money into the hedge fund and they control it all for you. But I don't believe you have any access to any of the Bitcoin.
So it's just like that's Wall Street, right? They promise to basically preserve they make us think like we're getting a good return with 12 or 14% when they're making hundreds of percent like we do in
trading,
right?
They're possibly taking more risk. So, but yeah, they make more than you on your money than you do. Whereas if you buy Bitcoin yourself, you're in control of your fate, both up and down. And if you're custodian it yourself and it goes up 100x, let's just say you're making 100x. There are no middleman. You might have to pay some transaction fees from the bank. From the exchanges that you're buying and selling from. But other than that, you're in control of it. Whereas the hedge funds are controlling it all and making them just like a regular bank. You go and deposit $100,000 into Wells Fargo or Chase Bank. They might be giving you 1.8% per year savings account. They might offer you a 4% per year CD, but then they loan your money out multiple times for multiple double-digit percentage gains. And so they're making money on your money, and they're printing more money out of thin air to do that with. And what do you get out of it? You get NSF fees, you get monthly fees for being able to use the bank account, unless you have a certain amount of money in there. So the whole point of decentralization is for you to take control of your money. You don't really need banks. You could have wallets and cold storage wallets, and you do need centralized exchanges in order to buy crypto. I don't even think you need that anymore, to be honest with you. But you do need to get regular money, US dollars, fiat currency, into crypto somehow, some way. So generally speaking, that comes from a bank, either your bank account, your credit card, your debit card, your checking account. And but once it's in crypto, you can then move it into decentralized platforms, decentralized wallets, and kind of exit out of the system. And now if the value of that crypto goes up 100x or 200x while you're holding it, you have a lot more power now. First of all, one, nobody knows you have it. And you're not at the mercy of a bank seizing it, going out of business, using it for something else. You go to the bank and say, hey, my 100 grand that I put in here is now worth $1 million. Can I withdraw it? Because try to do that and see what happens. They're not going to have the money to let you withdraw $1 million in cash. And they'll tell you, sorry, we can't do that. The most we keep in at the branch is $10,000. You'll have to make an appointment, and we can have it all ready for you by next Wednesday. And then they have to order it from Federal Reserve or 3 other banks locally. And then you're going to have to fill out lots of paperwork as to why you need that much cash and what you're going to do with it.
Yeah, Nico, I'll just say ETFs really kind of work similar to mutual funds. So they're going to put the paperwork, say they're going to sell, but then at the end of the day, they're going to sell that Bitcoin at spot. And then it goes into the fund. But if, say, for instance, you're in the silver ETF and silver's at 35 spot and it goes up to 70, they put a halt on trading and it goes up to 200. When it opens back up, if they halted it at 45, that's what you're getting.
Yeah.
And that's your share price. What end of the day, what's your NAV price, like a mutual fund, if it's whatever, and that's how it works. But they're selling it at spot. They're making the fees, they're making the VIG, and you're getting what they want to put in. If this is how operating agreement set up, this is what you get for the shareholders, the distribution at the end. Especially like it's this time of year, for instance, there's people that'll buy mutual funds this time of year, not realizing that they're giving distribution, and you could have bought it yesterday and you get a distribution and you didn't get anything on your money, but you're having to pay taxes on that distribution.
That's correct. There is some benefits, guys, obviously, which is a little bit safer for you. Maybe steady income, steady gains every year. But if there is a parabolic move, like Keith was just saying, if there was a parabolic move to the upside, let's say you had money in a XRP ETF, and let's say you put 100 grand in there, and XRP goes from $2 up to $3. Okay, that's a 30% gain. You're making money, everything's good. But if XRP all of a sudden pumped up to $1,000 and had a parabolic move to the upside, you didn't just make a 300x. You're gonna make a lot less than that. There's a name for it. I can't remember what it's called. Somebody might be able to help me, but you don't necessarily benefit from those very fast, huge moves to the upside. I can't remember what it's called. Something termination, death gain. I can't remember what it's called, but long story short is that whenever you turn over the responsibility to someone else to control your money, they have to get, in order for it to make it worth your while, they have to give you some safety features. They have to give you a good return. They have to give you some assurances that you're not going to lose everything, right? And so there is some of those funds where you only stand to gain, but when the market goes down below a certain amount, you don't lose. And that sounds like a win-win situation, right? But on the upside, they're making money in both directions and on the fees and holding fees and management fees, like a 401k and these types of things you don't really make any money on. they make all the money on. It's kind of a waste of your time. It's like a forced savings account with no interest. So you think that your 401k is growing or over the course of a couple of years, but really it wouldn't grow. It would have grown more had you just put the money directly into your own, mutual fund or your own, S&P 500 or a basket of funds. It would have grown more if you would have just put it into, a basket of, utility tokens during that same time period. So, a lot of people just, they don't want to learn and they don't want to understand how to do this stuff themselves. So they just trust. And this is the majority, by the way. Majority of people will just invest. And by the way, they're not even investing directly with these ETFs. They have financial advisors that come into these huge companies that have thousands of employees and offer their services, and it's XYZ Financial Services, and they're the ones that are setting up your 401k and your mutual funds and all that stuff through your employer. And you might have a six-figure income or a multi-six-figure income salary or something from your employer if you're a high-end executive or something, and every week money comes out of your paycheck and goes into these basket of funds, and one of them could be, or multiple of them could be ETFs, could be some going into BlackRock, some going into Grayscale, some going into whatever. And, you're getting a return on that over time. It grows. The question is would you do better on your own? The answer is usually yes, if you know what you're doing. And that's kind of what you're here to learn. But I mean, I don't think you can cash out of your ETF in Bitcoin. Pretty sure you cannot. It's a contract.
Yeah, you can't. So I just did a little bit of research. So it's what the spot ETF means is they have to hold the actual Bitcoin in their possession. And like what you said. So that's all it means is they just have to hold the underlying asset versus a paper or a non-spot ETF it's just paper on paper.
Yeah, they're holding the asset as a hedge and as collateral. And, worst case scenario, they wouldn't give you the Bitcoin. They would sell the Bitcoin to cash you out, or they would just cash you out with their excess funds from the billions. Like insurance companies, guys, you pay insurance every week, every month, rather, whether it's health insurance, car insurance, whatever the case may be, death, accidental death insurance, life insurance, things like that. Billions and billions and billions flow into the insurance company every year, and they have to pay out 50,000 here, 20,000 here, 100,000 here, 80,000 here. And this is a never ending pyramid scheme. The insurance companies make billions of dollars on the inflows, and the outflows are just less. That's why the longest running companies in existence on planet Earth in the United States and around the world are insurance companies. There are insurance companies right now that you've heard of that have been around for 150 years. And they're the richest. They never go broke. They never have a problem. And they pay out millions of dollars every day to settlements. It's because they just have more pouring in than's going out. That's all there is to it. It's like Social Security. It's the world's largest Ponzi scheme made legal by the US government. If you try to do it yourself, you're a Bernie Madoff and you go to jail. But they can do it because it works. All right. Anyway, back to what we were just doing here. I did see some questions I'm gonna address really quick over in the ICO section. I'm getting a server error in my Kavo wallet. It's working now. Okay. KC showing pending for quite some time. My pendings don't show that. I have 3 pendings maybe, but every day it seems like a new one is getting added. So I don't know why you still have pendings from back here. So I would check your simple server to make sure that your nodes are actually running on the server first. And obviously contact support as well if you haven't already. I'm not sure why that was be taking so long. It does take about a week before they go from pending to active, but that's 10 days. I mean, normally this one and this one should have already been active. These 3 should have been active, and maybe you only have 1 or 2 pending, but it seems like still having all these pending is taking a little too long. In fact, let me just go over to
is it normal for it to always be like a few days behind?
Yes, that's normal.
Okay.
I think some people asked about staking and which validator they should use and all that stuff. Billy sent me a screenshot of the one he used and one he recommends. I can post it in there, but that doesn't really tell me anything. And I personally have not staked anything yet.
I just started staking last week, just about 9,000 coins, and I just started getting a stake today for 2 coins. And he had said, I think I just posted it in the ICO group. If he said 100 coins a day, you get 120 stake. There's a 10% fee. So I think William said about 118, but I'm getting, instead of 2,400, I'm getting like 25.55, 25.60. So I'm still getting an extra 2.5%, but 2 coins a day doesn't really translate to the 20% or even the 18%. I have a call into support. They actually gave me Billy's number to text him and ask him directly about. So I just figured I'd wait for you.
Yeah, I don't know what percentage you're supposed to be getting on that. But this is a list of my distributions since I don't even think that's going, that's just 10. There's 2 pages. Let me go to 50. There we go. From the beginning, and I always have a couple pending. But then this one, maybe tomorrow or the next day, won't be pending anymore, but there'll be another pending one. So there's always a few days behind. But you've had pending all the way going back. Casey's had pending back from the 7th, which seems a little bit long for me. But I did have, it was about 5 or 6 of these pending before the first one started going active or distributed. So that's all I know. I'm in the same boat, guys. I have questions too, but I'm not worried about it right now because everything seems to be working for the most part. And I think for the most people, I know there's a few people in here who have other issues, like they purchased 10 nodes on 2 different cards, and the buy one get one free is not showing up yet. But those trouble tickets are in, and they're working on it. So I think those will be hopefully settled this week.
Nico, how are we supposed to receive like updates on what that network is doing or latest developments and that sort of stuff?
I think we need to tune into their channels for that. I'm not going to be giving those updates. I need to get the updates myself like you, but I did post in our, let me just go back here, in our group. If you go up to the pinned messages up here, the ICO links is my original post. These are all the articles and news stories. This is the live call I had with Billy. This is the node frequently asked questions. And so if you go,
I'm gonna update that again today with some of the newer stuff, but everything's pinned right there.
Yeah. So I would go over here. Let me just click on that. There's a lot of links here. This is Brian Ferry. This is one of the founders video. And I know that they probably have a YouTube channel. They probably have a Discord group too. I just haven't entered it yet. So I'll get that's a great question. So I'll try to find all of that information so that we can know where to get updated. Like for instance, Element, I'm in their Discord group. So in Element, we have a Discord channel, node insiders, people who have nodes. And so, when you own nodes, you should be in a group of people that are getting updated and, having all that information from the horse's mouth. So that way, you guys aren't depending on me to give you all the answers because I don't have them. But I'll work on that. All right, what's going on here? We do got a nice big W happening. We did bounce on this upward trending support line here. This is Bitcoin. And we are winding in. I mean, it's hard to say what we're winding into because we've been in a downward trending channel since Bitcoin's top up here at 126 and downward trending. And we came below this white line, which is the upward trending support line going all the way back. That is this white line here going all the way back to down here to the 15.5 range, really 25,000 for Bitcoin. And we've been above that this whole time. And this is where we broke below it and retested as resistance and dropped down. We dropped down first below the upward trending. Let me just show you this. We had this long dump down all the way down to the bottom of the downward trending channel. We also wicked down to the 80K 500 zone right here. And then we bounced back up and had a higher low, bounced up and had a higher high, even a higher high here, tapping this white line and this resistance level and this downward trending resistance all in the same corner right here. All three of them. I mean, look at that. This one went through to the white line. This one hit the orange line, and this one hit the red line. Boom. Then dropped. And then we did have a lower. We did drop below this upward trending support and then retest underneath. So what does that mean? Well, I mean, we could still be, I mean, so far we've had higher lows and we are up against major resistance. So we have to either break out of this, hold this support, break above this resistance, which was the most, which is the next one up right here, and then break through this resistance in order to get free of this downward trending falling wedge. Now, this whole thing is bullish. Falling wedges usually are. This is what happened the last time. We were at the top. We came all the way to the bottom, hit the white line, bounced, broke out, went to a new high. This time could be different and not in a good way because we broke below this line and retested it as resistance and dropped. And we came all the way, first time we came all the way down to here, 80,500. So that is the major support right here. And the next one down would be the 74.5, which would be the double bottom where we tested it back here. And that also just so happens to coincide with the previous high of 73.8 here, which is when we broke the previous bull market high back here of 68. So all of that is right here. We are kind of in this zone of either make it or break it. We either need to break back out to the upside. We need some kind of catalyst, something to happen to cause that to happen, or we're going into recession bear market mode. And the stock market, what is the stock market at right now, guys? The S&P, what is it, like 6,300? Like people are thinking, oh, we're at all-time highs. The stock market's doing great. It's not going anywhere. Stock market could drop 50%. Last time I even suggested that could happen, it did it the next day. You guys remember? If that happens, Bitcoin might just come down and retest this little zone right here. So, I mean, the market is bearish right now. I mean, we're still in a bull market because we're above 70K, but we're in a bull market like we were here. Whereas we had this all-time high, 64.5. We came down, bounced at 28, 29K, came all the way back up to 68K, made a new high, a higher high, 64.5, 68, slightly higher. We came all the way back down here, bounce, 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 fell through. Technically, we were still in a bull market during all of this until this happened. Once we broke through, that was considered bear market. Is there anything similar going on here? Well, let's look. We had an all-time high, 108, double top to 109, came all the way down, bounced, and made up a new high and had a little bit higher. We had 123.5, 124, 126, higher, 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 all hitting this upward trending resistance. And then we dropped all the way down, hit that white line, bounced for a split second right there. You can see that little green line right there. Kind of had a little bounce there and retested underneath and then fell further, but we bounced on this green line also. here we wicked through it and came right back above it. So we never, even when we wicked through it, we didn't hold underneath as resistance. We wicked through it, came all the way down to 74.5 right here. Kind of hard to see. Let me get rid of this. Let me just get this out of the way so you can see it. Right there, we wicked all the way down to those two lines right there, right down to 74.5, right down to that white line. Boom. And this horizontal resistance, which was this previous resistance, horizontal support rather. Right, look at that, right at the crux. And then we broke out. And then here we come down and we're hitting that same green line as support. Here we wicked below it and came right back above it. We did not hold underneath it at all. So could we wick down below it and touch this 80K? Yes. We wicked below it here, came back above. Wicked a little bit below it here, came above. We're bouncing on it right now. So this could be the line. This could be the telling line. But if we come below that and we don't bounce an 80K, and instead of having a double bottom, by the way, double bottoms usually break to the upside. Double tops usually break to the downside. So we would want a bounce down here if it's a double bottom at 80K. I was hoping that little pump today was something, maybe bouncing and pulling us out of here finally. Just didn't have enough buying pressure to keep going yet. We do have a long wick to the upside here, which is not good. So let's go down to the lower time frame and take a look at it. This is a nice whipsaw action, pump, big pump up, and a nice drop all the way back down to its starting point here. But it is still a higher low, and it is still so far bouncing on this upward trending support and above that green line I was just showing you. So what are we going to do? Are we gonna wind into this apex and break out to the upside? Or are we gonna drop below and double bottom here and then climb out very fast? And if those are just two options, there's one more option. Or are we going to break this line, drop down to here, retest, and then break through that green line and hold as resistance? It's okay to break through it and come back above it, but if we break through it and hold it as resistance, then we're going to go down to the next level. And this would be the double bottom. Boom. That's what I meant by double bottom here. Because we could bounce out of that really quickly like we did here. And I mean, as long as we're falling in this wedge, where does the wedge end? Where do these wedges usually end? And all you got to do is look, well, this one ended at the upward trending support. This one ended at the upward trending support. I can go back and find a lot of other ones. This one ended with a falling wedge. Very similarly, it came down and retested the previous resistance first. This is before any of this happened yet. Right here, resistance, support, falling wedge, support, breakout. This one, another falling wedge. This one came down and retested again, previous resistance before breaking out. But the fact that we broke through the upward trending support and we're still in a falling wedge and we haven't broken out of that yet means to me we could still see some further dumping. And the fact that there is no fast buying pressure moving us out of it means that there's probably some lower lows still to be had. But it doesn't necessarily mean it's going to go lower than this wick here. It could bounce there, and that would be a nice double bottom. Might even go a little bit through it just to and then we got a couple levels down here. That's why I have these lines, guys. So we have the next level down, which is 74.5, which is where this one actually hit. We could have a double bottom on this down at 80,500. And if that's not the double bottom, then maybe this is the double bottom with this. And if that's not the double bottom, then we have the previous all-time high support. And that's the last one before it's bear market territory. And then you're going to say, shit, I should have shorted up here. The problem is we don't know when the high is in until certain support levels are broken. Because this still might not be the high. If we have a wick down and a bounce out and we break above this upward trending, downward trending resistance line. Let me just get rid of some of these other lines so it's not so confusing. We break out of this downward trending wedge and we get back above this line. We could see a quick pump back up to 129, 130. That would make the new all-time high somewhere up here in this range.
What is a pi cycle telling you?
High cycle still for some reason far away. Gaussian channel, guys, first of all, this is the 5-day. We are underneath it, which is obviously not good. And we came up and retested underneath it. But it's still green. That's good. It's also not pointing up. It is coming back. It looks like it might be curving a little bit back down. That could be good, but it also could be temporary, like this, or it's curving. But if it's, see here, we were inside the Gaussian channel. When we broke through, that was considered bear market, and this turned red. Back here, it's still inside of it, but then it turned red, and then we fell through. Back here, we got underneath it and retested it first before it turned red, but that was bear market. Here, we got underneath it, and then it turned red, but we were already at the bottom. So there's a couple things, guys. We could have a bear market bottom that's at 60K, 50K, or we could already be at the bottom. We could be pushing the bottom range. In other words, we could come down to 73, 70, 68K and bounce. And that could be the bottom this time. In other words, we could be seeing a shortening bull market, bear market cycle, a less dramatic bull market, bear market cycle where the bull market tops are not super high, not parabolic, way above the previous one, like this, not huge, just a little bit above, and then bear market less dramatic than it used to be. Instead of dropping 80% down, and it's only dropping 40%. I wish I had a crystal ball, guys, obviously, but if we come down to 70K, that's a 44% drop from the top. That's a lot, but it's not in alignment with all the other bear markets, just so you know. I mean, if we go and measure every bear market cycle from the top to the bottom, it's 80%. %77. And so don't think we can't have a 70. 85%. Oh, Bitcoin. I hear people say, oh, it's never going to fall that low again. 93% on this one. But notice what happens every time that happens. Right after that happens, rather. We climb to new highs. Bear market bottoms, 85% drop from the top, new high. 83% drop, new high. 77% drop, new high. If we have a 70 or 80% drop now, guys, though, that's just going to bring us down to about the 30K range. And I know Bill and some other people who've been in here for a while know that we talked about that being a possibility over a year ago, 2 years ago. I mean, during this whole bull market, one thing that has never happened during this whole bull market is that we never retested 30K. As soon as we hit it as resistance, we broke through and we never came back to retest it during this whole 3-year period.
That'd be great. I mean, we went back to 15K, right? The last bear market. So it would make perfect sense for us to go down to about 30K at the bottom of this bear market, right? Because we'll never go back to 15. That's never going to happen. We know that.
Yeah, it would make sense. And the reason why it would make sense also, if you just want to look at the doubling effect, we went up twice as high as the previous bull market cycle. And we could come down twice as high as the previous bear market cycle.
Genius. Yeah, genius.
Possibly, certainly. But I'm not saying that's going to happen, guys. I'm just saying that that is a level that we never retested yet. And that would coincide with the average percentage drop in every other bear market. To identical, like, I mean, 70, I mean, if you take the average of all of these guys, the 85, 83, 77, and 76, let's just look at it. What is that average? It's somewhere in that range. All right, so we got, it might even be more, it might be 80%. So we got a 93% down here. We got a 8 plus 85% plus 83% plus 77% plus, if that, well, we won't even count this current situation. We'll just take the average and divide that by 1, 2, 3, 4, divided by 4. That's an average of 84% drop in every bear market. So when something is averaging something multiple times, should we think that that can't happen again? Should we think that this time is different? I mean, my logical, analytical brain is telling me, no, we shouldn't think this time is different. I mean, that it's been doing that every time. But my emotional and, you know, fundamental side is telling me this time is different. It's very difficult, guys. It's called what is that called? It's called a quagmire. It's called a conundrum. So you have to weigh both out. You have to look at both the analytical averages, historical price ranges, and then you have to also look at, well, this time is different. Why? Because of all the catalysts and all the things that have happened over this past year, all of the positive things about crypto and the digital age and the blockchain technology and all the companies and AI and everything converting over to digital currency and all the banks lining up and getting ready and all these ETFs that have unfolded over the past couple of years, which, by the way, back here didn't exist. Nobody even liked it. Everybody thought it was just a fad. But now all this good stuff's happening. The price isn't doing anything. That, to me, makes it seem like, oh, the big players are in now. The powers that be now are in with billions of dollars, and they are either artificially suppressing the values and the prices to get you to dump and get rid of and sell and, you know, get discouraged so that they can buy in at the lower prices, and then the prices will pump huge, or the retail and the whale sellers, the people who've made huge profit from here to here, are taking profits. And that's what's causing the price to dump temporarily. But inflows will come back in, inflows will outweigh the outflows, and the prices will continue to slowly grind up. If you listen to Michael Saylor, he will just say that we're not going to have these huge down bear markets anymore. We're just going to have these pullbacks, 30, 40, 50% pullbacks, and then slowly grind up to higher and higher prices. Okay. That's fine. I'll buy into that for a minute. Let's just look at this slow upward grind here. Let's just say that this is the upward trajectory. And then this is the upward rising wedge. Let me get rid of some of these so you can see everything. So instead of having this parabolic move up to 1.4 million or something like that, we're just going to slowly do this. That's fine. That still brings us up to the $1 million range, ultimately, right? But that does still mean that we are going to have this and this. And from here, and let's just bring that back one more time. Even if we got here to 238,000 and we had a pullback, look at that. That's a 40% pullback, just like what we just had. If we get up to 450,000, that's a 30% pullback. That's kind of like what we're experiencing right now. So far, I think we're at, what did I just say a minute ago? 40%. But if we go all the way down to that line, it could be 50%, 49%. So these could just be getting smaller and smaller and smaller. And that's if this time is different. We're still going to have pullbacks. Still going to have consolidation. If this time is not different, then we're just going to have another 70, 80% pullback. But when do we know? When do we know when that we are in a bear market as opposed to continuing, still having hope for a big pump to the upside? And I think that comes right around, getting into the 70s is going to be an indication, but getting below 70 is going to be it's going to be a real confirmation as far as I'm concerned. As far as the Pi cycle goes, let's add that. Let's go to the weekly. So as you can see, when the tops are in, and this is another thing that's just a little, it's not correlating with all the other stuff that's happening. So Pi cycle crosses, guys, usually indicate the top of the market. Here's the red, here's the green line. These are the Pi cycle lines. The green line crosses the red line right here. And you can see, if you look at the dotted line going straight up, that is indicated by that flag that says Pi cycle top. As soon as these lines crossed, the top was in. As soon as these lines crossed right here, the top was in. It doesn't matter what the lines are doing over here. It's when they crossed, that's the top. Right here is it crossed right here. Green lines above, red lines below. Right here, red lines above, green lines below. It changed again right here, but that was the top. Green line above, red line below, cross right here. And so look at it right now. It's very weird. The red line and the green line are very far apart, not even close to crossing. We came close. The closest we came was right here. And we haven't been close since. Now, the red line is also facing down and the green line is facing down. So what does that mean? The green line could be starting to turn. The red line would need to come up. And then, we could see a cross like right about here. But by then, this could have done this, and then we're coming down. But that would be December January, February, March, April. I mean, just to be out that far, it would have to do it like right now. In order to make it inside this year, it would have to do it like right, within the next 2 weeks. So I don't think that that's going to happen, to be honest with you, because it takes time for those pi cycle lines to get them together. Let me just go look. I mean, they were far apart here. Okay, this could be an example of where we're at. I mean, just give you an idea. Pi cycle, the green line is going up, the red line might be coming up, but from here to the time they crossed, I mean, you're talking about 6 months to a year. So it's hard for me to, I mean, that's just one indicator that has called the top every time. So should we not listen to that? Should we say, well, since the lines are so far apart, then the top's definitely not in. This wasn't the top. So maybe we're going to have some crazy move to the upside. That's definitely a way to look at it. You can say that. Now, so what I like to do is I like to take that indicator. Okay, so that's the positive. That's something that is an anomaly that normally happens when we hit a top, and it hasn't happened this whole bull market. So therefore the top's not in yet. Let's just say that that's true. Top's not in yet. And then let's look at all the other things, all the other indicators. On the 5-day, are we above or below the Gaussian channel? Yes. That usually only happens when we're going into a bear market. Let's look at some other things. Let's look at the fact that we dropped below the upward trending support line. This red line coming from all the way down here at the bear market bottom, and we touched this line all the way up, touched it, broke through. Okay, so that's bearish. That's not bullish normally when that happens. Not going into bear market. Let's look at the RSI. Let's look at the RSI on the weekly. We have bearish divergence on the RSI. We've been talking about that for months. The only time that has ever happened before, I mean, it's happened twice before in Bitcoin's history, both times. Here's one where the price is getting higher, but on the RSI, the tops are getting lower. So we have lower highs to the bear market bottom when we cross this dotted line down here. And we went into a bear market right here at the floor. We came down and touched it. We bounced. We made a lower high. We bounced again here, made another lower high. And then right here, we dropped below. As soon as we drop below the Gaussian channel, well, this is the weekly. But as soon as we on this one, as soon as we broke below the support, the previous support, as you can see here, that's when we fell below the floor. And that was the beginning of the bear market all the way down to the bottom. And so if we take this line over, we are already below the floor. But last time we got this far below the floor, we actually came back above it for one last pump to the upside. And as you can see here, very similar to the current situation, we had a falling wedge. Like we did here. This time we broke out to the upside and made a new high, falling wedge. We could break out to the upside, and we could be about to break out to the upside. In other words, we did wick down a little bit lower here. We come up, we break through the falling wedge, and we pump. This would be equivalent of us right now going from a low of 80 back up to like 110, 115.
Is that a 50% right there? Did it go up 50% of that drop?
I believe it's roughly 40%. Let's see. 43%, yeah.
Okay, thanks.
If I bring that over here right now from the low and we pumped up 43%, it would be 115K for Bitcoin. It would not necessarily be a new all-time high. It would be a nice pump to retest the top of, let's just say, 115, that would be maybe the top of the Gaussian channel, maybe pumping back through, which is like this, coming back up, it tried, but then, so what it would look like down here is we had a high, a lower high, a lower high, high, lower high, lower high. We fall through the floor. We've already fallen through the floor here, but we did that here too before the big pump. The difference here is we only had 1, 2. So here was the first high, 42K. And then here was the second high, it was a higher high. And that was the second lower high right here at about 58K. And then here was the third higher high. And another lower high here. We didn't even come up and retest that. We were below the moving average. But down here, we came all the way back up and made a new higher high at 68K. And here, as you can see, we did not even get above the previous high. So bearish divergence, lower highs here, higher highs here. If I take the actual line from there and put it to there, you can see the price was going up, but the RSI was going down. Same here. Here was the first high right here, 73.8. We come all the way down to the floor, come all the way back up, make a new high here at 108. That was this point right here, lower high. Come all the way down to the floor again, come all the way back up to 112, and then 123, 124, and 126, all lower highs, even though they were higher highs here. And then we fall down and we get below the floor. Not good. History shows us what that means usually right here. But we got below the floor here and we came back above it. So we need that to happen. I would say if we get below the 36, I mean, we already are. I mean, we're right there. Look at that. We bounced on it and now we're bouncing again. Look at that. That's the same line we hit right here. Even though we fell below the floor, we came down to there and bounced out and got back up. That was the nice pump. That was this pump right here. And we need that, but that doesn't guarantee us a new all-time high. It just means that we could have a nice pump before this bull market's over, before falling into a bear market. And if that does happen, guys, if we can hold support above this, and you see this RSI start to come up on the weekly, then we're probably going to break out. And I will be long, and we'll see how high it goes. But it may or may not make a new all-time high, but it could. But here's what would have to happen for that. We would not only have to break back above the floor, but we'd also have to, if all we did was come up here and hit that line and make another lower high. But this could literally make a new higher high, and this still only make a lower high. Then that will probably be the last time of the bull market, the last high. And that would have to happen in the next couple of weeks, I think. I don't think it's going to go into January and do that. Now, we could go into January and have a pump and have a lower high like this to 110 or 115. That would be equivalent to what I've been telling you guys about the 12-month candle. Opening a new candle and then that next candle going up a little bit, maybe 110, but not getting as high as this one at 126. It would be equivalent to that happening. So I think we could have another pump here on our hands anytime now. I would say that's imminent because we are bouncing on this line. I think once we get below this line right here, you can see what happened last time. We have a swift fall to the downside. If we break that line on the weekly RSI, and by the way, we have 4 days and 6 hours left for that to happen. We got the rest of this week. And, these indicators, they're not 100% fallible. I mean, they can things can change and the indicators can reverse, like here, where we were below the line, this line, and it came back up. But generally speaking, and you look at that, And if I go back further and you see when that happened before, and the previous bull market back here, we came down to the line, boom, 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 bounced on it, downward trending, falling wedge in the Gaussian channel. And then right here, we dropped off the cliff. And that's when we went below this line. All the way down to 32.5. And look at this, we bounced up in the next bull market. This is like a false alarm bull market. This is like a bull market in between the bull market. And then we came all the way back down to 3,500 again. We went all the way up to 13, 14K and came all the way back down. That was huge. Let's look at that. That was a 71%. I mean, we dropped 84% in that bear market, pumped up from the bottom up 337%, and then dropped again 70% in a very short period of time. All to do what? Just pump right out with a parabolic move to the upside. I know it's kind of nail biting, but yeah, this line down here, guys, the one that we're bouncing on right here, I'm gonna make it red just for this case here, is that this is the real bottom. I mean, once we go below this, it's always has been historically bear market down here. Just look at the dotted line going up. Every time we got below this red line, it was this area. It was this whole area. And the last bear market, it was this whole area. And here we are right now, bouncing on 83K or whatever we are, 86K. And we are just bouncing on that red line right now. So I think dropping below that, getting into the 70s is going to signal something from, I will probably be short at least in one of my accounts. Trying to write that down. I am, I wish I would have shorted 126. I mean, I think we did in the group, but we also got out on the bounce, thinking that we were going to possibly have a pump to the upside because a lot of other indicators were showing us that we were still, anything above 120, 125 was still considered bullish. So it's hard to know when the end is in, but now that we're getting actually to the end of the year and the end of the 3-year cycle for the typical bull market cycle, the only way to say that this time is different and we're not going to have bull and bear market cycles is for that to actually happen. Because if you just look at history, it's always happened. It's always not happened. We've always had bull and bear market cycles. I want that to be true, but until I see it, I can't count on that. And now let's just look at one other thing. Let's look at the stochastic RSI, because this is also doing something important on the weekly time frame. We have hit the bottom down here, and we crossed the blue line, did cross the orange line to the upside, and it was on its way up to cross this dotted line, which would have been very bullish. But as you can see, it crossed back over the orange line to the downside. That's not good. So we got more bearish things, more indicators showing bearish things than we have indicators showing us still positive things. But that doesn't mean that we can't still pull it out. So, and this is where fundamentals and catalysts and all these other things come into play. All these other good news and stories and governments and all this stuff that's actually happening come into play, because those are the only things that can change the technical analysis. Out of the blue fundamentals, all the other good things, all the other catalysts, that can change the trajectory. But something big has to happen. Something bigger than what has been happening has to happen, because even these catalysts that we have been seeing that seem big aren't doing much. So let's turn some of these off for a minute and go and look at market cipher beat. See what's happening over here on the weekly. We do have a green dot, guys, that just formed. Is that the one I talked about the other day, yesterday? Yeah. So we have a double green dot right here. And all we got to do is look over to history on market cipher. We've got lots of green dots, but very rarely do we have a double green dot. And generally speaking, that doesn't mean beginning of a bull market. It does usually mean a big pump, but let's just look at the last few times that's happened. Here, right here, we did have a big pump. Right here was when the double green dot happened, and we pumped all the way up to here. So let's just look at it. Let's take a line from there to there. That was a 85% pump to the upside. But keep in mind, Bitcoin was only $160 back then. And then we then came back down and had a little bit of a lower low right after that. Right here, double green dot. We had a big drop, another big drop. This was beginning of bear market here, guys. Boom. Double green dot. And then a big pump back up to try to get back up. 45% pump to the upside. That would bring us right back up to about 115 if we had that. But then as you can see, it fell further after that. So that's where we're at right now. We could have a pump right up to about 115, right about here. That would make a nice head and shoulder pattern if that were to happen, if it wasn't big enough to take us to a new all-time high. I'm just giving you the rundown of every possible scenario, guys. Then it would look like this. Shoulder, left shoulder, head, right shoulder. Pump up 110, maybe 115. Break, bear market, 60 some K, bam. Possible. These are all the possibilities. And this is what even if I didn't have an audience and I'm looking at this myself, I would be drawing all these lines trying to come to the best, most likely scenario. I mean, I hope it makes sense, all the things that I've gone through and showed you all the possibilities because of all the different indicators that we use and all the ones that are out there, what they're all showing us and where we're actually at. Because it doesn't matter so much what an indicator is saying might happen or should happen. It's what's actually happening that's important. And kind of right now, we are on the precipice of a possible breakout, either to the upside or the downside. But in order for us to have that scenario I just laid out, where we have a head and shoulder break of this downward trending falling wedge, which is likely, bouncing on support here, could come down as low as 74.5 or this line right here. It could stop right there at 80K, or it could come down as low as this one, 70, 73.8, 74.5, like we did here. Boom. And then breaking out for one last hurrah, one last attempt. Boom. And climbing up to the 110, 115 range, and then fizzling out. That would be the end of this bull market if that were to happen, and it would be a perfect head and shoulder before a bear market dropped, which would look almost identical to the last time this happened, where we did have a left shoulder, head, right shoulder. Now, this right shoulder did not come up as high as the left shoulder, but this still was a 44% pump to the upside. A 44% pump to the upside this time would bring us up to about 115, which would still be a lower high. Anybody got any questions about anything?
Do you think we'll have an all-time high before the halving?
We already did. I mean,
Yeah.
you mean before the next halving?
Yes.
I mean, we did already, if you think about it. We generally have all-time highs after halvings. So these vertical lines going straight up are the halving. Here's the halving back in 2013. Here's the halving in 2016. Here's the halving in 2020. Here's the halving in 2024. We go through a halving, and then we usually have a parabolic move to the upside. We come to a bear market. We take a few months. We go through the halving. A few months later, we have a pump to the upside. We come back down to the bear market. We go through the halving. A few months later, we have a parabolic move to the upside. We come down to the bear market. We go a few months like that. We go through the halving, and we have a move to the upside. This doesn't look like much, but this is the first time in Bitcoin's history where we actually had an all-time high at 73.8 before the halving. Normally, we have to go through the halving to get an all-time high. This all-time high back here at 68K was after the halving from the previous all-time high, which was after the halving from the previous all-time high, and which was after the halving from the previous all-time high. This was the only time we actually had an all-time high before the halving, right before it in April. And then we'd have the halving, and we did make an all-time high. We went up to 108, 109. We come down and we went up to 112. Then we went up to 123, 124, 126. So we've had multiple all-time highs since the halving. Now, as far as having one before the next halving, we technically already did. So, and we are already coming down into the purple zone, which is usually where we come down to in a bear market. But this time is different because we didn't go up into even the yellow zone, let alone the orange or the red. Back here in all these other bull markets, this is the rainbow chart. We went up into the yellow, orange, and even bright red. This one even went above it before coming back down to the blues and the purples, which is the bear market territory. And then we're still upward trending, but the price is getting higher, but we're still in the low buying stage, accumulation stage. Then we pump up and get back up to the yellow, oranges, and the reds. And then we come back down to the blues and the purples. And we break through the halving and we go up to the yellows, oranges. And this time we peaked into the orange, but we never even got into the dark orange or the red. And then this time we didn't even peek into the light greens or the yellows. So what's happening here is we have depreciating returns. The parabolic moves to the upside from the bear market bottoms have been decreasing. Back here, we had, let's say, 1,000x from the bottom down here, from $4 all the way up to, $1,200. 1,000x move to the upside. Back here, we had a bear market bottom, $233, all the way up to 20 grand, 19 grand, like 100x. And then here, bear market bottom, 3,500, all the way up to 68K. What is that? 40x, something like that, 20x. So the X factor is getting less and less and less. And then here we got a bear market bottom at 15, and we went all the way up to 126, which is about a 7, 8x. So the X factor is getting cut in half or multiples every single bull market cycle. That doesn't mean we won't steadily keep climbing in price. It just means that these huge parabolic swings might be getting diminished and less and less and less. And then we're just going to go into a steady, slow grind up. So to ask if we're going to have another all-time high before the next halving, I don't know. Yeah, I would hope so. That's a long ways away. That's like the next halving is 2028.
So Nico, based on the chart that we're looking at right now, when would you make a move one way or the other, whether you're buying or selling? What would you do that here in the next couple of weeks? Just looking at the chart as it is, if you were going to make a move at all.
Well, I posted a signal last night, long on XRP. I mean, I'm giving signals every couple of days, I think. If you scroll up in here, I'm using my open positions on the 12th, which was 5 days ago. So I'm trading. It's just that they're not necessarily long-term trade holds. So it depends on your question, I guess. Like if I would have shorted up here at 112, the top of the bull market, I would probably want to stay in this trade until the bear market bottom. If I'm waiting for a bear market bottom before going long, I'm not going to not trade at all during this whole time because I can scalp this market. I can go long in the bounces and go short on the tops of the downward trends. And I could, short the breakouts and get out with profit here. But I could just short and stay in and ride it all the way down. But you have to know that we are ready to go into bear market. And I'm not 100% convinced yet because we're still above, the 80K zone. I mean, we got to stay above like 70. I would say that 70K is like this whole 68, the previous all-time high, 68 to 73.8 right here. I'm just going to move this back up there just to show you what I mean. This whole zone right here, I think we need to stay above. And we are above it right now. Because if we break below that, then it's bear market. And then you're going to say, yeah, but that means it's been in bear market since 126. Yes. But if when we got here to 108, 109, if we would have thought that was the top and thought that the bear market was in, and we wrote it down and it bounced right on this zone and went to a higher high, we would have been wrong. So this could do the same thing. It could bounce here and go to a higher high. And until it doesn't do that, in other words, if it breaks below this, then I'm going to say, okay, this time this bull market might be over. So as far as your question is, based on what I'm looking at right now in the charts, what move will I make? It does depend on if it breaks this support level or not. This green line also that I have going across here is very similar to this green line back here in the last bull market. We came down and bounced on it, made a higher high, bounced, went below it, retested as resistance, and that was the beginning of the end. Here, we hit it as resistance, bounced on it, made a new all-time high. We came down and bounced on it. Bounce. Very similar. Bounce. We could pump from here and go up quite a bit that would bring us, like this similar pump from here to here would bring us up to about 110, 115. That would be us bouncing on this green line right now. And it looking like this. Whoops. And it going like this. Bounce, pump up to 115. And then, but if we break it, guys, under 86, 80, well, over here it would be 87. Over here, if we fell through right now, it'd be like 85. But I would say that that's pretty bearish. And then I would go back and look at the RSI that I was showing you here. And if we're below that line down there, like the 35, 36 level on the RSI, then to me, that's hard to get back above for a while. And also, I would look at the whole market in general. I mean, are we in stagflation? Is the stock market going to crash? Are we having problems? Trump says everything's fine. The stock market's better than it's ever been. Prices are better, gas, everything is great. Unemployment is low. What could go wrong? Famous last words. So other than the fact that the prices aren't getting higher, I mean, the markets aren't moving up, and we broke major support. I don't even know if I answered your question, but I can't. That's like a crystal ball question, and I have to wait for certain levels to be broken first before I can give the answer. Like we need to either hold above or break below, let's just say 80K. And right now we are above it.
No, you answered. Thanks.
Victoria just raised her hand, boss.
Victoria.
Is it typical to have these smaller moves to the upside going into a bear market?
Yes.
Or sorry, going in. Oh, yeah, I said the right thing. Yeah. Okay. So it kind of looks like we are headed to the bear market, even though I get you say those monthly candles or look like it's still red, but it can turn green to then make our cycles that it's been in the past. But I'm just wondering if it's going to be different this time. I guess that's kind of.
Yeah, me too. I mean, that's the only exception to the rules. Normally, when you're doing price action trading and you're looking at the charts, you're looking at history, you're looking at price action over the past year, 5 years, 10 years. And so if we're basing the current market cycle on that, on the history and on bull and bear market cycles and what they've always done, then you can say this time's not looking any different. It's doing the same thing it's always done at the time that it's always done it. Like, for instance, this candle right here on the 12-month time frame was the bull market top. And this peak, I'm sorry, not the peak, but right here when it ended and this candle started was January 1st. When this candle ended, it was December 31st. And this candle started January, and it did go up a little bit in January. That would be equivalent to us ending this year at 89K and us pumping up to 110. It didn't get higher than this, though, which was the all-time high. So that would be like us. And by the way, this candle historically, after a bull market top, after the 12-month candle is done and this candle starts, is usually red, which is the beginning or the bear market. And then we have 1 year down and 3 years up. And here's the next one. Then look at this. January 1st, this candle starts and it goes up, but not as high as it was the previous candle. And this could take, a month or two, and then we come back down and then the candle turns red, bear market. 3 candles up, 3 years to the upside, bull market top, boom. Oh, what do you know? January 1st, this candle prints and this one opens. And then that's the bear market. And then here we have 3 candles up, 1, 2, 3. This one went all the way up to 126. That was the all-time high so far. Now this, I will tell you, is the first time that this candle has been red. So if you look at history, all these bull market candles, green, 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 and green. I'm sorry, not this one. This one should be green. So is it possible to turn green? Yes. The price would have to get back above this level, which is about 93, 94K. Once we get up above 94K, this candle will turn green. Could that happen? Then it has to happen in the next 2 weeks, by the way. It has to happen before December 31st, and that is 14 days and 6 hours. And so that's another reason why we could think or presume that there could be a pump happening in the last 2 weeks. Not only that, but all of these big pumps in these bull markets happened in December, and they were 40% moves to the upside. So if we had that 40% move, that final push, that would bring us to about 110. Unfortunately, it would not necessarily make a new all-time high. I'm sorry, 115 approximately from the bottom, from the 80K that we were at, not from where it's at right now. This candle would turn green, and then it would print, and then the next candle would open on January 31st. And historically, that would be the bear market candle. Even if it did go up a little bit first. If it goes up a little bit first, that means that this candle will turn green for a little while, but then it will turn back red again as soon as it gets below the previous candle's ending point. So hopefully that's not too confusing, but we got 14 days left to see what happens with this. And it just so happens that, like what I said a minute ago, is if we break above, if we break the downward trending resistance on the falling wedge, we could have that 30-40% pump to the upside. That would create a nice head and shoulder pattern going into January for the beginning of a bear market. That would be typical of history, bull and bear market cycles. That would be right in line with what's always happened. But that would be only if this time is not different. If this time is different, we could end this candle wherever it ends, the next candle opens, and we could shoot to the moon and get up to 300K in January, February, March, which would be an anomaly. That has never happened at the end of a bull market cycle. That candle has never been higher than this one. This candle never went higher than this one. This candle never went higher than this one. This candle never went higher than this one. So just looking at that, it hasn't happened, but it doesn't mean it can't happen, because everything's possible, right? So that's why I don't like to give exact predictions, because I can tell you what I think might happen, but that doesn't mean I will be right, because something total. It's kind of like I've given the analogy before, guys. It's like if you got a friend who's always on time and always tells you he's going to be there at 6 p.m. and every week he picks you up at 6 p.m. and week in and week out for years, he picks you up at the exact same time, 6 p.m. and he's never late and he's always on time. Why would you ever think this time is going to be different? Does what he says he's going to do. History has proven that that's the time he picks you up, right? So but you can't say it's impossible for him to not pick you up this time, because anything can happen. He could have a flat tire on the way. He could get a ticket. He could get in a car accident. Something could happen. And this time could be different. But if I were to bet that he's going to pick me up at 6, I would just look at the history and say he's never late. He's always picking me up at 6. So my money is on him picking me up at 6. And so with that being said, my money is on this doing what it's always done, regardless of what all the regardless of everything else, because everything else is just hearsay. Everything else is just words, but it's not, but the charts are what is telling me what's happening. But I will be ignorant to not say or think that this time couldn't be different, because it could. Something could happen at the last minute. And I kind of hope it does, actually. Actually, I do. I mean, of course, I hope it does, but with that being said, though, it's you know, I know everybody wants an exact, and when should I get in to make the most money prediction or signal, but it's very difficult for me or Chad or anybody to be that precise. And we have been before, don't get me wrong. We've given signals that go up, you know, almost immediately after we tell you to get in, but those are usually trade setups in a normal environment. And right now, we are 2 weeks out from the end of the 12-month candle on a bull market, on the end of a bull market. Historically, the end of a 3-year market cycle right here, ending in 14 days and 6 hours. That's one thing. And then if I go to the lower time frame, we have some things happening that might indicate that we already broke the upward trending support. Depending on where you take that, put that line, but we hit it and broke through. Now we do have another long running one here. Let me show you this one. From 2011. I'm going to change this to white. We had resistance in 2011. We had support in 2013, support in 2015, resistance, support, going into 2016, support in 2020, support in 2022. And right here, right now, as we speak, we are possibly breaking that. Bouncing on that long running one and hold and testing underneath as resistance. We did bounce on it, bounce on it, bounce on it, and now possibly resisting. So there's a lot of different support and resistance lines you can take from different areas. I mean, I could even go from here there to here and say, okay, well, that is the 80, that's an upward trending support line, kind of like what we had here. I know it's starting to get a little convoluted with all my drawings here, but let me just get rid of them. But as you can see, this was somewhat upward trending support. And we do have something kind of similar here. This, when it broke this, was the bear market. After a double top. And a drop. And a final bounce with a head and shoulder. So that would be equivalent to us bouncing here. Trying to come up. And not being able to get above that 108, 109, 110 range. And then falling back below. But this is kind of where we're at right now, guys. We're bouncing on this. After making an all-time high. And having a falling wedge. We just haven't broken out of this one. This one, we bounced and we broke out. Right here. We double bottomed and bounced out and retested and then tried to make a run for it. This is that 40% move to the upside I was telling you about. But then we lost steam, couldn't get through, and then dumped into a bear market. And this was technically a kind of a head and shoulder there on that last pump. So that would be like us doing that again here. I know I kind of just went over this, but sometimes it's good to see it again. But that would be like us doing it again here. And falling out of this downward trending falling wedge, double bottom, break out, retest, and then having that one more pump before fizzling out. Now, that's just a scenario. This one more pump could bring us to a new all-time high in the next 2 weeks. But in order for that to happen, all of the RSIs, the stochastic, the regular RSI, the EMA ribbon needs to flip back positive. The Gaussian channel needs to go back positive. There's so many things that we're below right now that it would be very difficult. If that happens, that'd be great. But as you can see, we flipped the EMA ribbon bearish, and we've been underneath it ever since. Is it possible to break through and flip it? Yes, that's the EMA ribbon. Then we got the.
Could that ribbon flip in one day? Or no?
Did it flip in one day?
Can it flip back in one day, in 1 day candle?
I mean, we could get above it, like right here. We usually, when we get above it and we get back up, I'm sorry, I'm on the wrong time frame. That's why. We have many times got down into it and wicked down to the bottom of it and climbed right out. Got down to the bottom of it, climbed right out. But when we get below it and hold as resistance underneath, got to the bottom of it, climbed right out. Got through it, climbed right out. Got underneath it and held as resistance. As you can see, we went above it, but we did not hold above it. And that was that right arm of that last attempt. And we fell back below it. That was the beginning of the bear market. We stay under it that long before we can get back above it. So rarely, well, here's an example. Well, getting below it is one thing. Okay. Let me just be clear, guys. We've gotten below it and came back above it. Gotten below it, came back above it. But holding below, flipping it means we got to the bottom of it. We flip it underneath. We were above it, above it, above it, above it, above it, below it, below it, below it, retesting as resistance, bear market. Above it this whole time, bull market. Above it this whole time, bull market. Flip, retest underneath, bear market. We don't when we're underneath it, it's bearish. We are underneath it right now. Could we flip it back? Yeah, we could break out and get back above it, but that would be equivalent to this getting back above it, but that was after the bear market. I wouldn't even compare these two because these two we didn't really retest underneath and hold its support. We dipped down way below, came right back up to it and broke right back above. Whereas here we are literally making lower lows underneath it and candles holding on the weekly. This is 1 week, 2 weeks, 3 weeks, 4 weeks, 5 weeks underneath it. But yeah, I guess if there's some anomaly or some catalyst that can cause it to pump back above it, that's kind of like what happened back here. We did flip it. We were underneath it, holding as resistance, and we broke the downward trending resistance and pumped up. We did get above the MA, but we did not hold above it, and that was the beginning of the end. That would be equivalent to us doing that right now. We break out of the downward trending, and we pump above the EMA. EMA, ribbon, and then we fall back below. That would be the equivalent of that happening. So yeah, and that would be the triple top. That would be the head and shoulders. That would be that last hurrah up to 110, 115 I talked about. These are not set in stone, guys. They're just indicators. And when you stack them all together and compare them all, there's too many that are all saying kind of the same thing. There's too many that are flipped to bearish now. We got the EMA ribbons. We got the Gaussian channel. There's one thing I haven't talked about or showed you guys yet, and I'll show you that right now, that we don't talk about that much because it is usually only accurate on the daily, I think, which is the Williams alligator, which I have somewhere up here. Maybe I don't. Let's go back and find it. Williams alligator. Okay, so I'm going to get rid of the EMA ribbon for the time being so you can see it. Williams alligator. On the 5-day. Let me get rid of some of this other stuff. Let me make this these lines a little thicker so you can. Okay. So in the Williams alligator, when the green line crosses the red line and the blue line from underneath, the green line's at the bottom, and it crosses the red line and the blue line, it's usually a giant parabolic move to the upside. And then the green line stays on top all the way up. And then when the green line crosses the orange line and the blue line to the downside, it's usually a big dump. Green line crossed the orange line. I mean, the red line and the blue line right there. Both of them. Green line crossed the red line, the blue line. Bear market all the way down to here. Green line crossed the red line and blue line back to the upside. Bull market. Here we are. Green line on top. Crossed the red line and the blue line to the downside already. It did that back here when we were at 110. And they're heading down. Now it did it here too during this falling wedge. So that's why I'm saying that we need to break certain levels first before I'm going to consider this a bear market. Because when I look at these, yeah, it's happened before. And we do drop quite a bit when it does. But we kind of already did drop quite a bit when it did up here. We dropped all the way to here. And sometimes, like I said, if you look at all of these different indicators and then they're all showing something bearish, then you kind of have to check off the boxes, guys. How many boxes do you need to check off before you make a decision? You know, it's like, so there's still hope, yes, because we're holding above a certain level. This could break to the upside, and that green line would probably cross the red line and the blue line back to the upside, just like it did here. Crossed right here. We came down, 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 bounced. As it came up, the green line crossed the red line to the blue line, and we pumped up to a new high. But generally speaking, when it does cross, it is the beginning of a big dump. And so that's just one other indicator. And they are crossing to the downside as well. The only anomaly, guys, is the pi cycle. The pi cycle is still so far away, it doesn't make sense because that has always historically indicated a top in the market. And if 126 was the top, then it would have crossed. So with that being said, if all we had was the pi cycle indicator, I would say the top is not in. But we have all these other ones too, and this time could be different. And maybe the top is, who knows, February, who knows? Maybe we could have something different where this candle, this 12-month candle, gets beaten by the 13th candle, which is the first candle of the new year. And maybe this time is different. And that whole thing I showed you on the 12-month time frame, where every 4 years that's the top, maybe that will change finally, and we will no longer have bull and bear market cycles. I mean, that's what has to happen for all this stuff to not make sense anymore. We have to really have a big change. But with that being said, it's certainly possible. Look at that. If I take that line from that previous support, bring it all the way over, we had support and we have support on it now. Does that mean anything? Is that a real line right there? Well, you know, it's weird about these support resistance levels. You go back far enough and things will just blow your mind about how everything still kind of just matches up. If you draw a line from previous all-time high right here, 68K, bring it forward. That was the resistance. We did wick above it to 73.8 rather, but we never held above this white line. We never held above the previous all-time high until we broke out here, and we never retested it. We came down and retested 74.5, which was kind of close. This is why I was still short when that happened, but as you can see, it's kind of close, but it's not actually right here at the 73.8, and it's definitely not here at the 68. So what is that telling me? That we still have this whole zone down here to retest. So for me, we could see not only a test of that 73.8, which would be technically a double bottom here, but we could just wick down to that 68K too, just to be on the safe side before we have another big move to the upside. That all has to happen either relatively quickly or this time is different, and it's going to go into the new year and do that. That's all I got to say about that. All right. So as far as let's just go down to a much lower time frame. Let me look at what's happening on the local level right now. We are still in this little pump and dump. Does look like it's trying to come back down now to touch this floor again, which we did hit. Resistance, resistance, support, 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 support. That's this green line, that upward trending green line there. So if we break through that, guys, then we're possibly coming down to double bottom here at the 80K level. And if we can hold on this and maintain these higher highs, higher lows rather, then possibly we can break out. So in the short term, guys, I'm long until we break. I was long here on this bounce, and I should have taken profit here. I was up about $400 or $500, but and this is what we just talked about on the last call, guys. Taking profit when you're in it. But the reason why we don't is because we think, oh, this might be the time it breaks out. And if this is the time that breaks out and Ethereum goes to the moon and Bitcoin goes to the moon, this will be the best entry in the world if I just stay in. When really you could have taken your $400 or $500 right here. And then if it bounces here, you could have re-entered, or if it breaks through this and retests its resistance, you could short, make another $400 or $500 here, or 1,000 or whatever. Or you could wait for take your 500 here, wait for the bounce, wait for it to break back out of here, and then enter again here and make up anything that you thought you would have made by staying in this one. You could make it up here. You don't have to stay in the trades to make the same amount of money. You just have to get back in at the right time. Any other questions before I wrap it up, guys? We got basics call coming up at 2 p.m. Great call to be on if you're new or relatively new. Bill will be holding that call at 2 p.m. And if you look in on the trade signals channel, the trade chat right there, you will see he posted it already right here, basics call. And then if you go into the announcements channel, he posted it here, basics call. I'm going to get rid of these embeds. And then if you go to inside the Zoom chat that we're on right now, he posted it probably here too. There it is, basics call. So no reason for you to miss that. Make sure you get on that. That's more of a continuation of this call and also answering basic questions. And I'm sure he goes over a lot more than just that. So feel free to get on that call, guys, if you have time. Otherwise, I'm going to wrap this one up and I'm going to post the recording in the Facebook group. But also, I am watching closely today. A breakout to me is imminent. Whether it's a break to the downside or a break to the upside, something's about to happen. Some strange things are happening in the world. XRP ETFs, like 7 of them went live. Inflows there have been insane. The price is not changing yet. Very similar, or reminds me very similar of the Bitcoin ETFs when they launched back when we hit 73.8, and we spent 200 days consolidating before we broke out and went from 73.8 all the way up to 108. 109,000. So it was 73, 35, 40 grand to the upside. And so what would that be equivalent? That would be equivalent to, I don't know, that would be equivalent to us. Percentage wise, if XRP did that, let me just look. Let me just look before I just end it like that. That would be equivalent. I'll show you on my screen. This is when it happened right here. Right here, ETFs happened for Bitcoin, 13 of them. And then the price just kind of floundered. But once we broke out here, we went up 48%. And of course, we did have a big consolidation after that, but then we went all the way up to 126. So 70-some% or so.
Nico, do you think that the decoupling of XRP from Bitcoin will happen after the ETF pump?
Do I think that the decoupling from Bitcoin will happen when the XRP ETF? Say that again, I'm sorry.
Yeah, same. Yeah, you just reversed it. But yeah, like you're saying.
Well, you said Bitcoin ETFs. So Bitcoin ETFs are already long gone.
Sorry, I said it backwards. Like you said, it was 200 plus days before it shot up. So yeah. Once it shoots up, do you feel like that's when the decoupling will happen? Have you ever seen anything decouple before? I guess that's another question.
Yeah. So during altcoin season, usually the altcoins do decouple from Bitcoin, and Bitcoin loses dominance, and we have what's called altcoin season, and it kind of looks like this. So Bitcoin is going up. It's the leader. All other coins are kind of correlating and following Bitcoin, right? Bitcoin then hits its top and then starts to lose dominance. And then altcoins tend to have their all-time high, and Bitcoin kind of flounders a little bit. And then micro caps are doing all of this at the same time, and the mid caps and the altcoins start to come down, and then micro caps have their all-time high. So it's kind of in waves. Bitcoin first, then this would be called, I guess, a decoupling, the way you put it. But I think XRP's decoupling is going to be different. But altcoins do this to a degree during altcoin season, where Bitcoin kind of loses dominance, goes into like a little dulls. Bitcoin doesn't necessarily go down while these go up. It just doesn't go up with them. So it looks like they've decoupled, or it looks like they're not correlating anymore. And that has happened during altcoin season, but we might not see an altcoin season. Maybe already we saw it. I mean, XRP did go all the way up to 5K. Maybe, it kind of happened already. I don't know. It still could happen, but when XRP decouples, it's going to be a much further different situation. I think once XRP decouples from Bitcoin correlation, Bitcoin could be, hitting an all-time high at 130, 140, where XRP could do 100x and go up to 10, 15, 20 bucks, 25 bucks rather quickly. And that would be a major decoupling. They would no longer correlate after that. I don't think they'd ever come back into correlation again. But that's only because of the utilitarian purposes that it will happen for XRP. You're welcome. That's my opinion. There might be some smarter people out there that can explain it better. Yes, Keith, like stock sector shifts. Yes. I hope so, Victoria. Oh, Victoria, you were the one to ask the question. Yes, I do hope that we do have a decoupling soon. I'm ready. I'm ready for XRP to have its day. I mean, it's been going on for too long, too many years. And there's a good reason, though. I mean, obviously, it was in a legal battle for most of that time while Bitcoin had its freedom to move up. And XRP was prematurely held down. And obviously, it has gone up quite a bit. Don't get me wrong. XRP has gone up. What? 6x, 7x over the past year or two, from 49 cents up to 360. Just a little consolidation right now. But I think a pump, a 60, 70% pump to the upside would bring us right back up to $3.60. That could happen. That would be kind of a decoupling, or that could just be normal altcoin season that would cause that to happen. But once we get above that 360 into the $4 range, guys, then we're going to have a much bigger move. And it'll look like this real quick. Let me just show you, because before we've had these levels where we were down and then we come up and we consolidate for a while in a sideways channel. Then we finally break out, consolidate for a sideways channel. We finally break out and we consolidate for a while in a sideways channel. So it would require us getting back up. 70% would bring us back up to this 360 range. But breaking out of that into the $4 range and holding as support here, then that would be the beginning of a much bigger parabolic move to the upside for XRP and bringing us up to a new level where we might get up to, let's say, $6, and then we come down and consolidate to 450. And then we go sideways for a little while up here, like we did here, like we did here, like we did here, before breaking up to, $8, $9, $10. That could happen too. All right, guys. Any last minute questions before we wrap it up? We got basics call starting in 5 minutes. That's an excellent call. Make sure you're on it if you can get on it. I know you've been on, we've been on for a long time, but if you can still get on that. Bill goes over a lot of things that I haven't even covered. Sometimes I forget to cover. So it's a great call to be on. All right. Well, you guys have a great rest of your day. Basic call link is just posted again. I'm going to post this. Sunnyville asked if I'm going anywhere exotic for the holidays. No, I'm not. I'm staying right where I'm staying put. We're not going to have a live webinar. We will have our calls like Monday and Tuesday. For the next call, obviously, is this Friday, but for us in here, then we'll have our normal Monday and probably Wednesday call. Wednesday, what is Wednesday? Is that New Year's Eve? I don't know. Let me see. Yeah, it's Wednesday. I'll do the 12 call. I'll do the 12 noon call on New Year's Eve, even though some of you may have plans, but you don't have to be there. It's not gonna be 2 hours long, I'll tell you that. And then we're not doing a webinar on Wednesday or Thursday of next week because of Christmas, but we might do one Saturday, the 27th. And we are doing one tonight. We're not doing one tomorrow. So if you guys want to be on it, you're welcome to. Ask for the link in the main chat and we'll share it in there. Otherwise, it will be posted in the free Facebook group right before the call goes live. And we were doing that tonight. And then, after Christmas, going back into the last week of December, January 1st, which is New Year's Day, we'll have our normal webinar schedule again. Tonight, yes, Lynn, there's a call tonight. That will be the webinar. The public webinar. You guys don't have to be on it. It's for people that are not in the mastermind, but you're welcome to join. All right, guys, have a great rest of your day, and I will see you in the main chat.